So here's a big question for you. Could the US government seriously be thinking about revaluing its gold reserves? I know it sounds like the kind of thing you'd hear in a late-night financial podcast or from some conspiracy theorist on YouTube. But stay with me for a second. This isn't just some wild theory. We're talking about real, tangible conversations happening around gold monetization and what it could mean for the global economy, and more importantly for you and your finances. I get it. You're probably thinking, gold, what's the big deal? But if the US were to suddenly pull the trigger and massively revalue its gold reserves, we could see some truly crazy shifts, and we're talking gold prices that could skyrocket to $10,000, $50,000, or even $100,000 per ounce. Yeah, let that sink in. $100,000 per ounce. Could you imagine the possibilities? I'm sure you've heard about the crazy price fluctuations in gold over the years, but a major shift in the value of gold would be like flipping the financial system on its head. We're going to break this down and look at the reasons why this could happen and, more importantly, how it affects you. As an investor, as a saver, and even as someone who's just trying to make sense of all these financial headlines. Let's dig in. First up, let's talk about what exactly monetizing gold even means. Now, when you hear that, it probably sounds a little out there. It's almost like something from an economics class you tuned out of years ago, but it's actually not that complicated. Monetizing gold means taking something that's been sitting in storage for decades, like the US gold reserves, and turning it into a liquid active asset that can help solve some of the country's financial problems. Imagine having a mountain of gold at your disposal, but instead of just holding it there, you use it to fund important stuff like government projects, paying down debt, or even strengthening the currency. For the US, that could mean taking the gold it holds, and we're talking about over 8,100 metric tons of gold, sitting in places like Fort Knox and revaluing it at today's prices, instead of the outdated $42 per ounce valuation it's been using for decades. I know what you're thinking. Wait a minute. If gold is actually worth more than $2,900 per ounce in the market, why is it stuck at $42 per ounce on the government's books? Great question. That's exactly why this whole idea of monetizing gold is picking up steam. If the US were to officially revalue its gold, it could unlock an enormous amount of liquidity and give the government much more flexibility. We're talking about a massive shift in financial power, and that, my friends, could have a big ripple effect on the broader economy, even on your portfolio. So, why exactly is this coming up now? Why is the idea of monetizing gold suddenly a hot topic? Well, let's talk about why it's being seriously considered, especially at a time when the world is already facing some pretty wild economic challenges. For starters, national debt is a massive issue. The US national debt is currently sitting at a jaw-dropping $36 trillion and climbing fast. To put that in perspective, that's more than the entire GDP of many countries combined. And the problem is that paying that back under the current system is becoming increasingly impossible. The traditional methods of raising taxes or cutting spending aren't working, at least not in the way they need to. But here's the kicker. Even that $36 trillion debt is just the tip of the iceberg. There are also unfunded future liabilities like Social Security and Medicare, which are projected to add up to around $80 trillion in the coming decades. Now that's a mountain of debt that could make even the most optimistic economist break out in a cold sweat. The current system can't handle this kind of burden forever. So, what do you do when the financial ship starts to sink? You throw a life raft out there, and that's where gold could come in. Gold has historically been a safe haven in times of financial chaos. In recent times, the US dollar has been losing ground at a crazy pace. In fact, the dollar's purchasing power has dropped by at least 97% in the last century. That means the money you're holding in your bank account today won't go as far tomorrow. The US government knows this, and it's facing inflationary pressures and has a currency that's looking less stable by the day. But here's the real kicker. The US dollar's dominance as the world's reserve currency is also under attack. Countries like China and Russia have been buying gold like there's no tomorrow, and they've been doing it in preparation for a world where the US dollar no longer holds the same weight. And this isn't just some random trend, it's a global shift. These nations are looking to break free from the US dollar, and they're stacking gold to do it. So what does this mean for the US? Well, a gold-backed currency could be just the thing to help restore confidence in the US dollar. By tying some of the dollar's value to gold, the government could stabilize the economy and give people a reason to trust the dollar again. It's kind of like a financial security blanket for the country. But the question is, how far will the US be willing to go to get there? Let's look at a few possible ways the US could revalue gold. First, we've got the conservative approach. If the US were to simply revalue its gold reserves to the current market price of $2,900 per ounce, it would unlock about $800 billion in liquidity. That's a solid chunk of change, and it could help relieve some of the immediate pressures on the US financial system. This approach would be pretty straightforward and not terribly disruptive, but it's still a signal that the US is getting serious about gold again. But what if they went a little bolder? If the US were to revalue gold to something like $5,000 per ounce or even $10,000 per ounce, things could get really interesting. This would create a significant shift in the government's fiscal position, and it would potentially give them a lot more room to maneuver when it comes to reducing debt. But of course, this kind of move would send shockwaves through the markets. Other nations would likely scramble to acquire more gold to avoid their currencies being devalued. And you can bet that inflation would likely rise as well. But if it's handled properly, this could be a way to create a financial reset without triggering total chaos. Now let's talk about the extreme scenario. If the US decided to revalue gold to something like $50,000 or even $100,000 per ounce, we'd be looking at a total financial reset. This would be a major disruption to the global financial system. The value of fiat currencies would plummet, and gold would become the new standard. But here's the catch. This would trigger hyperinflation and possibly even an economic collapse for nations that don't hold significant amounts of gold. The US would essentially be in a position of power, but the rest of the world would be in crisis mode. If that sounds like financial Armageddon to you, well, it kind of is. But the people who have been preparing for this, those who own gold, silver, or other hard assets, would likely see their wealth explode in value. The thing is, you've got to ask yourself, are you prepared? Do you own any gold? Because if you're holding on to fiat currency in a situation like this, you're looking at a whole new set of challenges. So what does all this mean for you? If you already hold gold, you're in a good spot. You might even see some serious gains if this revaluation happens. But if you're still holding on to cash, or you've been relying on stocks, it might be time to take a closer look at gold and other hard assets. Gold isn't just an investment, it's insurance against inflation, currency devaluation, and financial instability. And right now, it might be more important than ever. With all of this in play, it's clear that gold monetization isn't just some far-off idea. It's becoming a real possibility in the face of economic pressure. The question is, how far will the United States go with it, and what will the global fallout look like? The next few years could be critical. But as always, you should do your own research and make sure your financial decisions fit your long-term goals. If this whole situation plays out the way some experts think, it could be the most important financial move of our time. Now, if you found this video valuable and you want to diversify your investments beyond traditional stocks and bonds, I have just the thing for you. Even though I believe that investing in a low-cost index fund is the best long-term investment for the average Joe, the benefits of solid physical gold are hard to deny. I think of physical gold as insurance against unpredictable times, and I'm not the only one. In 2023, central banks added over 1,000 tons of gold to their reserves, the second highest annual purchase in American history. And in 2024, central bank got another 290 tons of gold in just the first 3 months of the year. If the biggest banks in the world are buying tons of gold, I'm sure there's a good reason for it. I found a company that allows ordinary Americans to own and securely store physical bars of gold as part of their IRA account. The best part is that they're giving away a free guide to teach you all about investing in solid physical gold. If you want to learn more about how gold can protect your retirement savings, just click the link in the description to receive a completely free gold IRA guide.